Good morning. Hope you guys are doing well. It's been a good conference. We're on the last day. Who's hungover? I am.
Listen, the hungover people are not here yet.
That's right. That's exactly right. They're watching. They're watching online. All right. So just a little context setting before I turn it over to our wonderful panelists. The challenge that these guys are attacking really goes to, I think, the heart of the future of the internet, right? How do we balance privacy and trust? Old internet, we gave up privacy for trust. But now, with the technologies that you are all developing and launching, there can be a better balance. I believe that there can be a better balance. To a large degree, the company that I run, Inca, works on the other side of this coin. We collect open source data and then we analyze that data to provide intelligence to financial institutions. And what you guys are trying to solve is actually the core of the problem, right? Which is, how do you, from a tech-first perspective, address this like really fundamental issue? And we have an opportunity to do that, right? And really to change the state of the internet and how we as global citizens engage with the internet. Okay, so with that context, over to you guys. Scott, starting with you, obviously, AI is a growing challenge. I'm seeing it in my business. When we were chatting on the phone, you said that your work is to make deepfakes irrelevant. Can you describe what that means, what you guys are doing, and how that impact, like what the real world impact is on that to financial institutions, to crypto, and beyond that? And then I encourage everybody to riff on that.
Sure.
Yeah.
I'll try to be brief so that the smarter people have a chance to weigh in. I think we all can see the trajectory that we're on with the increasing sophistication of AI deepfakes and the difficulty of detecting them and the fact that they're going down in cost. And where this leads is we're going to reach a point where seeing is simply no longer believing, and where you're not going to be able to discriminate between the synthetic and the real. And so with the comment, making deepfakes irrelevant, what we're trying to emphasize there is, rather than try to defeat a deepfake or detect a deepfake, what if you could just make deepfakes irrelevant by having a trust asserting capability rather than a impersonation detecting ability? And that's really what SureMark is striving to achieve. I think I'm going to stop it there so that there's more time for others. Although, I wonder if I could take up just one thing that you've mentioned, Adam.
Of course.
Because you talk about the trade-off between privacy and disclosure. We talk about the balance between them. And I actually think the situation is improving, that it's going to be better than that. Namely, trade-off and balance implies that it's a sort of zero-sum game. And you can either have all of this at one end or all of that at the other end, but whatever you gain in this, you're giving up in the other. And I think the real innovation that many of us are talking about is the fact that selective disclosure allows it to be not a zero-sum game. You can win and win. You can eat your cake and have it too.
Yeah, I think it's totally fair criticism of the framework. I agree, and actually I was going to go right there to Fahmi on selective disclosure and what you're up to, and describe it and.
Yeah, absolutely. So good morning, everyone. So Fahmi, President of Midnight Foundation. Midnight, we believe that transparency is not the way that people should operate, businesses should operate. Why did the blockchain the industry come about? Why was Bitcoin invented? It was invented post the financial crisis, post the various data hacks and leaks that Ed Snowden and others sort of exposed. There was a distrust of the financial markets. When you needed it most, access to financial rails, to your cash, was denied. And nobody had absolute truth from centralized counterparts, whether that's large data technology corporations, large banks, that the asset that you own was actually there and available for you to retrieve, to withdraw. But the flaw with the technology and blockchain when it came about was transparency. Transparency and truth are often intermingled as being the same. There is truth from privacy. Privacy is a fundamental right, both a physical human right, but also a digital right. And from your private state, we create trust. Today we will meet each other, we'll shake hands, we'll introduce ourselves, share our name, share where we work, share where we might come from, and that creates a bit of a bond, a trust. So at Midnight, we believe that your journey in blockchain should start fully private, not just shielding data and the transaction, what you do, but who you are, the way you are, and who you are interacting with. And from that fully protected metadata protection and shielding and data shielding, through smart contract technology, you provide selective disclosures through proofs. So the data is never on chain. So you're never exposed. And that proof can gateway you into different levels of trust, whether that's confirming your identity, confirming the jurisdiction you're from, confirming your net wealth. Today in this audience, I see many faces, and thank you for turning up so early on the last day of consensus. People here will wear their name badges, and you walk around and you see their names and go, oh, I want to speak to you. And you'll engage them, and they will tell you about their business. But when you ask them about how much money they have in their bank balance, they will close up. And yet, on blockchain, we've accepted that it's okay for everybody to see your account and how much you own and what you do with that. And we hide behind the fact that it's anonymous. And yet, some analytical firm or AI bot in the future will discover you and dox you. Because the blockchains that are transparent and immutable. So it's not that you don't get discovered today, you will get discovered some point in the future. So we believe that metadata, data shielding with selective disclosures is important. Life is not binary, there's not black and white, different shades, 50 shades of privacy in between. And we believe that Midnight can expose that and help both individuals and corporates bring Web3 closer to Web 2, and we think that's the convergence of Web 2.5.
So Paul, and then I think back to you, Fahmi. I understand conceptually how this works. First, talk about what you're building, and then, but then also part two connected to that question is, especially with your experience today, can a bank or an exchange or an L1 actually integrate any of these tools? Like, how usable are they? One of the things that I've experienced in my own business, right, is like, just be honest, like, even selling an API into a firm for like risk intelligence presents challenges because the technology company on the other side, it's going to take, they've got 2 people that can integrate an API, and it's going to take 6 months, right? So like sometimes I worry about like the actual technological implementation of these things. What do you see, and also what are you building? Yeah.
So great. First of all, everybody, I'm Paul Brody. I used to be the blockchain leader at EY, and now I am the founder of a company called Nightfall Networks. We are taking the privacy technology that EY developed and commercializing it and implementing it on chain. We've actually been working on this since about 2018, and so the answer is yes, the privacy technology works, it scales really nicely, there's quite a few people who built some really cool technology, but also, you are right, this stuff is actually quite difficult to implement, and so what's happening right now are there's 2 things going on. There's what I'll call the easy track, also known as your mess for less, and then there's the sophisticated full encryption track. And let me explain what those are. So solutions like Nightfall, Midnight, Aztec, these are full zero knowledge-based encryption solutions. You are taking the data on-chain, you are rebuilding something on-chain that is fundamentally completely private or has the ability for selective disclosure. But it takes time, right? And even with Claude Code and everything else, you can integrate really fast now, but if you're a bank and you care about security, that's not something you're going to do. Like, you don't just ship stuff if you're a bank. So in the meantime, what we have is the easy path, also known as the your mess for less. And what this does is you take stuff that already works and you find little workarounds that give you something that approximates privacy without having to do all the encryption or integrate something new. What the form that currently takes basically is off-chain netting. So if I am an exchange or a banking entity and I've got a pile of wallets here and I've got a pile of wallets over here and I've got a bunch of transactions going back and forth, I'm aggregating all of those transactions, I'm netting them off-chain so that, like, from here to here is I owe you 10 million and you owe me 8 million, I'm going to send a net of 2 million over. That provides you with the low on-chain transaction cost. It provides you with all the on-chain transaction speed at a tiny fraction of the traditional off-chain cost. It comes at a price, and the price is functionality. You don't get atomic swaps, you don't get smart contracts, you can't use DeFi protocols that way, but if you want to just send a bit of money really fast and cheap, it works extremely well and doesn't require complex encryption. My joke that I always tell is this, and forgive me if it's a little off color, but there's this joke, men will do anything except for go to therapy. Software developers will do anything except for fully implement encryption. And I get it, it's hard, but at the end of the day, if you want this stuff to work, that's what you're going to have to do. If you really want it to make blockchain native technology with tokens and smart contracts, you're going to have to do the whole encryption, privacy, full stack thing.
Who wants to respond to that?
I'm waiting to hear from the smart guy on the panel.
Yeah.
I haven't heard from Ulysses yet.
Heading to him. Respond to that, please, if you don't mind. And then also,
which part of that? Like, there was a long part of the.
I actually, for the framing, do you agree with that framing from your perspective? And then also for you, not just implementation, because obviously we've seen implementation, but how does this work with prevention and then also with law enforcement, which is like the next like topic that I want to get into. What trade-offs do you see for law enforcement? How do you defend a system that you're not necessarily allowed to see into? I understand that selective disclosure exists, but like it's still imperfect and not fully implemented. I know I threw a lot at you.
That's fine.
But go, please, yeah.
Great. So maybe I can give a bit of background. I think that was helpful as well. So I'm the CRO at Hypernative. We're essentially the trust enablement layer of Web3. We understood very early that things such as audits are only one part of the solution. And so we created a solution that allows exchanges, financial institutions, asset managers, protocols, chains to identify, monitor smart contracts and transactions continuously in real time, identify risk insights, and then enable them to take automated actions. This was something that we didn't believe was possible back in the day. I've been in the space for 10 years, and I've been in transaction monitoring for probably 8 of those 10 years. And actually what we're seeing today is that there is a misconception on privacy, right? Like, it's not because a chain is focused on privacy and most of its transactions are shielded, if you like, that you cannot pick up signals elsewhere. It's actually very important to pick up signals outside of the perimeter, if you like, when it comes to privacy chains, and it can be done in many different ways. You can look at cross-chain flows. Bridges are a very important part of that. You can look at protocol state changes. You can look at wallet behaviors before execution, liquidity signals. Those are very strong indicators of potential attacks, and we're monitoring those all the time. Also, another thing that you might have noticed in the last few months, in the last 3 weeks, $600 million plus were hacked. And what we're seeing is that most hackers are not focused on the transactions themselves or the chain itself, because those are much safer than people think. It's actually the infrastructure layers that are being attacked. Social engineering is a big part of that. So that's a very important part of what we're focused on. When it comes to law enforcement, I think that up until now, there's been very strong progress that's been made on the monitoring side. But the problem that we've seen is that most companies out there haven't been able to deliver continuous monitoring, right? So we're not talking about seconds or minutes, we're talking about milliseconds, right? So you have a few milliseconds to act, to take action, and if you're not able to deliver real-time data, then you're going to fall behind. So that has been a very important part of what we focused on at Hypernative. We're seeing a lot of that being done by financial institutions. Financial institutions care about this holistic approach. They understand that simply having a screener and screen transaction once a day is not enough. You need to have a real-time component to that. So I tried to answer multiple questions at once, but hopefully that was helpful.
Yeah.
How will you screen transactions when they're in a privacy layer, whether it's midnight or nightfall?
So I think that going back to the first point, I would look at signals that are surrounding the transaction, right? So things that are either directly connected to transaction or indirectly connected to transaction. That's what we would be looking at to identify potential breaches. There are chains where, depending on the percentage or level of privacy, like ZK, for example, like shielded versus unshielded, you can focus on the unshielded part of the transactions, and that will give you a lot of insights on the shielded part of the transactions. This is also something that most people don't know, but Monero, for example, there are ways to trace transactions also in Monero. And they're not connected directly to the transactions, but to signals around the transactions. And in my past life, we've had very successful cases where we were able to unlock or solve cases that were connected to Monero, especially due to, in the Lazarus case, the North Korean state.
So Monero is a good example, though, of a very weak privacy solution, right? Compared to like a ZK-based full encryption kind of layer. So I think I do think it gets challenging because you won't be able to see the vast majority of the transactional data. For example, with Nightfall, the only thing you can see really is that someone is transacting. You cannot, you can't see through the proposer who is transacting. You can't see with whom they are transacting or what they are transacting. So the level of privacy is extraordinarily high. That's what enterprises want. But I do think it's going to make some of the other things around it, traceability, signals, external signals monitoring, it's going to be really tough. You can see people putting stuff into the network. You can see people taking stuff out of the network because you have to come out of privacy for that. But within the network itself, the level of privacy is going to, very high levels of privacy are going to come into conflict with some of the better monitoring solutions, I think.
And so how does, and there may not be an answer to this, right? But how do you square that with what even financial institutions need to complete everything from the normal compliance regulatory crap that they need to deal with, all the way to getting pinged by Treasury and law enforcement? How do you square those two things?
So I actually think it comes down to stuff that Fahmi's been talking about and Scott has, which is selective disclosure and verification of who's actually transacting, because privacy and anonymity are not the same thing.
Absolutely. So I think we're approaching this from the wrong end of the spectrum. So when we think about the vast majority of people, they're comfortable with compliance. They're comfortable with KYC procedures. If you think about access to crypto in general, most people go through central exchanges, and most central exchanges require you to be documented in some form or another. So the question that you asked earlier was, how do banks come to and accept these solutions? How do you monitor these solutions? Well, At midnight, we were proud to announce in March a partnership with a UK-regulated bank called Monument Bank. They're a neobank, one of the fastest growing banks in the UK, currently with $10 billion of assets, servicing high net worth individuals. And with Bank of England approval, so one of the strongest central banks globally, and the PRA, they have got approval to tokenize their clients' cash deposits on Midnight. And the reason they chose Midnight, and it was a 4-year search for them, and Midnight didn't go to market until very recently, is they wanted a permissionless solution, because a permission network meant they would send their transactions into a network controlled by somebody else. And that it was something that they weren't comfortable with. And they weren't comfortable that their clients' information may be viewed by a counterpart that they weren't comfortable with. So Midnight is a permissionless network that allows private domains to be created. So what Monument Bank are doing are tokenizing their cash deposits on-chain in a private walled garden, a private enclave, a private domain that only they and their clients get to see. But Monument Bank alone aren't party to this transaction. They also need a digital custodian. So the digital custodian that we're working with them has to be comfortable that they can understand who is part of that trade. And that's where the selective disclosure comes in. That Monument Bank can provide a form of disclosure to the custodian that the owner of the asset has been KYC'd, vetted by a regulated entity like Monument. So that's phase one. So then you create this private compliant solution within a permission network. So you're not siloed away from other services. Phase two of that is to bring in RWA assets. Assets like fractionalized private equity, fractionalized hedge funds, something more than just money market funds that these clients can't access through the traditional digital rails that Monument Bank have created. Monument Bank will whitelist those assets so those clients can switch those deposits into those assets. And again, that creates a compliant environment for them to operate within, because Monument Bank need it to be compliant. And then the third phase of that is once you get to a world where they've swapped their cash deposits, tokenized, into real world assets with yields, and they've got a diverse portfolio on chain, they can then represent that as collateral for Lombard lending. Access to better leverage, better financing, better lending and borrowing. This is what the future of finance on blockchain looks like. It is not private, permission, where you're siloed and somebody else gets to see what you do. It's not public, where everybody gets to see what you do. It's a permissionless private solution that corporates, banks, regulated entities can come. And the beauty of all of this is that the Midnight blockchain technology is invisible to the end client. Good technology is invisible. When you all came over here with your Uber app, you just want to know that the driver picks you up and delivers you here safely. You don't care for the fact that there's a call to Google Maps, there's GPS calls, maybe a database call, maybe a credit card call. You just care that the app works. And to Monument Bank clients, they'll have a banking app, and when they put deposits in, or they switch to money market funds, or to digital assets that Midnight is enabling, it looks no different. They don't even know the blockchain exists. And that's where we need to get to with our technology.
You know, if I could just riff on that for a little bit. You talk about access to better lending, access to better options. One way we talk about that is we want to both protect identity, but when it's in our interests, we want to project identity. Okay? Knowing that I'm KYC'd gives me access to additional opportunities. Knowing that I do triathlons is attractive to a life insurance or health insurance provider, and I want to project that aspect of identity. And so I think that's sort of taking the selective disclosure from the minimum that I have to do into the maximum that I can do to better my own situation. So we've got, for example, one of the nation's largest cybersecurity insurance underwriters so much wants to give their clients the ability to project identity in social engineering exploits that they're paying us to install it in several thousand of their clients' corporate efforts. And it's all about the ability to assert who I am that is going to reduce their claims and reduce the social engineering exploits. So again, we get to that, yes, we want to protect, but selectively we want to project, we want to go on the offensive.
I mean, it makes total sense, and it's really turning even like the social media model on its head.
Yes.
A little bit, right? I mean, the amount of data that they're able to collect on. I mean, it's insane now that I've seen some of it. I mean, it's like literally every click, everything that you've typed into your phone, where you've been, all combined. I mean, it's crazy. Okay, does anybody else have anything to add on that point? And then we have 4 minutes left, and I always like to kind of end it with this game of like, where do you see your industry moving in the next, 2 years is too long, a year to a year and a half, what do you think is going to happen? What are your predictions? Ulysses, let's start with you, and then after that, Paul.
I think that when it comes to security, there's more and more institutions that are entering the space. More and more institutions see a need for a holistic solution to risk. It's not simply about looking at compliance or fraud or simulation. You need to have all of that into one platform. I think that audits are becoming more and more obsolete, if you ask me. It's much more about continuously monitoring signals that are both on-chain and off-chain. And it's about enabling companies to not simply identify these signals, but also execute automated actions on-chain. At Hypernative, for example, in the last 3 years, we saved over $2 billion worth of funds, enabling customers and non-customers to prevent hacks and exploits. And I think this trend will continue. I think that AI will play a big role, and is playing a big role. We will see over $200 million this year, I think, in AI-led, entirely AI-led hacks. And so in order to battle that, we need to make sure that our solutions are prepared to tackle those challenges. And I can talk a bit more about that, but I think that's what we'll be seeing in the next 6 to 12 months.
Paul?
My expectation, kind of 3 things happening over the next 12 to 18 months. First, we're going to have really widespread adoption of what I'll call extremely limited but non-encrypted privacy disclosures, things like off-chain netting, other ways of managing the process to maximize privacy without having to change the underlying infrastructure. The second phase is going to be, and that works really well for things like payments. Second phase is going to be the adoption of more like true crypto-native, privacy-enabled zero-knowledge solutions where you can have tokenization and you can have on-chain, under privacy, things like swaps and transfers. You can have atomic swaps that are really making use of the native blockchain infrastructure. And then in the third phase, we'll start to see the first like green shoots of fully encrypted private smart contracts where you can do things like DeFi protocols and business-to-business agreements. I think one thing that just from not from a technology but a business model perspective, people are going to discover is blockchains drive down the prices of a lot of these transactions so much that markets that look big today, like overseas money transfer, are going to look kind of small tomorrow. Blockchain is going to do to international payments what voice over IP did to your phone company's business, right? There's no guarantee that you're not going to keep the revenue and the profits. It's headed towards zero.
I can see the future, and I tell you why. Because when I look over there, I see JP Morgan, and I see Midnight over there. In the same window. Future is not fragmented blockchains. We have too many chains, too many fragmentation. It is clunkier to trade in crypto and to do business in crypto than a traditional TradFi rails. The convergence of technology, ZK technology, a connective, ubiquitous privacy layer like Midnight that can connect a JP Morgan to a Morgan Stanley, to you individually, to a monument bank, that is already happening. So that is the future I see. JP Morgan, Midnight, ZK, ubiquitous technology, a connective layer of tissue where the ZK provides proof of your identity, of your assets, of your transactions, but in a way that through selective disclosure is for the viewing of the people that need to know, whether that's the individual, the bank, maybe even a regulator, and not everybody else. And that is the future of where blockchain's heading.
Scott, you started us.
Sure, I think I'll keep it brief because I think our time's already expired, but I think of it in terms of the individual. Individuals right now feel that any information I give out means more spam, more intrusion, more chances of being hacked. I think people will love to learn over the next 18 months that by choosing to project certain things, they can get people to come to them on terms that they want, terms that are to their advantage. And once people get a taste of that, it's really addictive.
Thank you very much for your time, all of you. Appreciate it, and looking forward to everything that you guys are developing here in the future.
Okay. That was good.